There's a growing belief that Solana is going to surpass Ethereum and skyrocket in 2025.
And this is really why we believe Sol is going to flip ETH in market cap.
I mean, the Solana price on its own has been steadily climbing. The Ethereum value market cap has been bleeding into BTC and Sol. I mean, we see that in the Sol versus ETH valuation. Solana has been outperforming Ethereum this whole year.
And so if you believe that the metrics on the prior three charts are going to continue in the same direction, then it's pretty reasonable to conclude that the ratio of this chart is also going to continue in the same direction.
Managing partner at Multicoin Capital, Kyle Samani, backs this up with some pretty interesting data.
First, of course, blockchains are financial systems. I've been talking about trading for the last few minutes. And on-chain trading is, in our view, the most important metric for a blockchain.
So this is comparing DEX volume on Solana versus DEX volume on Ethereum. Solana is outperforming.
Over the last year, we've seen Solana DEXs basically come to rival Ethereum DEXs. Some weeks, I believe every data point here is weekly. So some weeks we're seeing Solana is higher than Ethereum, other weeks it's less than Ethereum. But it's today effectively on par with Ethereum in terms of daily trading volumes on-chain.
Many people attribute the growth to Solana's 1, better UX, but 2, cheaper fees. And again, this channel will point out both sides of the issue. That's why you subscribe to Altcoin Daily. But I do believe a big reason that Solana is gaining on Ethereum is because so much of that network activity is being offloaded into the L2s. I mean, actually, that's clear. That is where the value is going. And maybe you would say, well, Austin, that all counts for Ethereum anyway. But because many of these have different tokens, the value is accruing on these L2 tokens. So that actually does support the thesis that if trend continues, Solana is going to accrue value at a faster pace and potentially flip as Ethereum value accrual is more fractured.
But Solana, I think, was so distributed during the bear market. Like, so many of the big entities had to sell it off.
And that's true. While Solana coin distribution, especially in the early days, was a bit more centralized.
Solana, I think, was so distributed during the bear market. Like, so many of the big entities had to sell it off.
The sell-offs during the last bear market really helped with that.
We've seen really strong support right around this 110 to 125 range.
Watch today's whole video for a special Solana trade I want to share with you.
Next, I want to look at actual direct value accrual to Sol, the asset, versus direct value accrual to ETH, the asset.
But just looking at another fundamental metric, Solana has caught up and at times started to surpass Ethereum in economic value generated from MEV, or maximal extractable value.
As of today, Solana, again, is effectively caught up to or is rivaling ETH on this metric. This is looking at the total validator tips paid to ETH stakers and Sol stakers in these respective systems. Some weeks Solana's higher, some weeks ETH's higher, but again, these metrics are more or less neck and neck right now.
And again, if that's too confusing, just understand it's a fundamental green flag for the network.
And then the third metric I want to look at is stablecoin transfers. Here, Solana is still well behind Ethereum, but I want to look at the relative ratios here. About a year ago, Solana was at roughly 1/10 or 1/20th of daily on-chain stablecoin transfers relative to Ethereum. Today, it's roughly half. So it's caught up by a ratio of roughly 5 to 10x, depending on exactly how you want to measure it. And again, we think this is key to show that, hey, money is moving around on-chain.
So this all suggests why Solana has been catching up to Ethereum. But will it flip it? What can we expect with Solana in the future? And there's really 3 big structural advantages that the mainstream media won't talk about. I will.
All right, now I want to talk a little bit about the future for Solana and why we think it has a couple of, really 3 unique advantages that we think are going to be basically impossible for the Ethereum community to recreate. The first is token extensions. Token extensions went live earlier this year on mainnet. Token extensions provide a lot of features that Wall Street companies want, or that payments companies want, or any major asset issuer around the world. Those include features like interest-bearing tokens, so like if you want to have stable coins on-chain with it earn yield. If you want to be able to have confidential transfers so you can hide sender and receiver. If you want to do ability to issue and revoke assets, and a whole bunch of other features that in this kind of bucket of ideas. And all of these features were developed based on direct input from payments companies and Wall Streets over the last few years. And all of this is live on mainnet today. It's 100% free, 100% open, All the documentation is open and available.
So token extensions is number one. And this is actually the reason that PayPal chose to launch their stablecoin on Solana.
The first major token using token extensions is live now. It's called PYUSD. It's PayPal stablecoin. It went live a few months ago.
So this is why we're seeing some of this institutional adoption.
And regulated finance is only ever going to come on chain at scale if they have all of these collection of features. And all of this stuff is just built into Solana L1 natively, and it's ready to go.
Solana Fire Dancer is obviously one of their most anticipated structural advantages still coming.
Fire Dancer is a new Solana client, expected to go live in the next few days or next few weeks. I think they're announcing the dates tomorrow at Breakpoint. For those of you who are unfamiliar, Fire Dancer is a new Solana client being built by Jump Trading.
Actually, it's live on testnet now. Still unclear when this will go live on mainnet. And essentially, this will just make things so much more scalable, so much faster.
This thing is going to scale, it's going to be fast, and it's going to allow everything that we like about Solana, the composability, the no bridging, all these things will just magically work even better under Fire Dancer.
And the third major structural advantage for Solana is the ability to scale with hardware.
One of the foundational design principles of Solana is the focus on scaling organically with parallel hardware. Anatoly's been talking about this since day one. I've been talking about this for years. And the idea is very simple. Is if you double or triple the number of cores in the system, you would hope that the performance would double or triple of the system. Very straightforward idea. This is obviously generically a good idea because of Moore's law over the last 50 years. As core counts have grown, especially over the last 10 or 15 years, systems that can take advantage of that have gotten better in terms of performance. But this is actually particularly important today because of the renaissance happening in AI. There's now more capital going into the entire silicon value chain from design through manufacturing, and that's growing at the highest rate in both percent terms and absolute terms in the last 30 years. And this is all because of this AI renaissance. And all of these AI chips that are being built by all of these different startups, NVIDIA, AMD, everyone, all of these chips are massively, massively parallel chips. Not all of them will work for Solana, but it doesn't matter. You only need a couple of them to be applicable. And those are going to help drive the performance of Solana even further. What's so amazing about this AI renaissance is that it has absolutely nothing to do with crypto. No one in the Solana ecosystem has to know or care about any of the stuff going on in AI land. And you just have like an incremental 30, 40, 50 billion dollars of R&D happening across all these various companies. And all of that labor and energy is going to produce a better Solana network. And like those are the kinds of really foundational bets that you have to make at the core of the design of the system in order to win what is going to be one of the largest markets in the world, which we think is decentralized NASDAQ.
Now, my personal opinion on all this is, first off, just plain and simple. In bull markets, you want to bet on the altcoins, especially the lower cap altcoins outperforming. And in bear markets, you want to bet on Bitcoin or the higher caps outperforming. If you believe we're going into a raging bull market in 2025, as many experts do, then I do think it's a smart play to bet on the outperformance of the altcoins, especially lower cap. Also, I will say, looking at macro, the Fed just cut rates, the European Central Bank has been cutting rates, China is now stimulating their economy and cutting rates. 2025, from a macro investing standpoint, does look risk on. If you got value in today's video, hit the like button and click subscribe. We are so close to hitting 1.5 million subscribers who tune in for one video per day to learn about crypto. What's the one altcoin you love trading when you're not trading Bitcoin?
Solana.
Now, in my journey to learn about trading and just get better at it, I think many of you watched Simple Method to Make $100 a Day Trading Cryptocurrency, where we go over the risks. We go over simple strategies, the benefits, the negatives. Watch this beginner's guide if you haven't. But in this never-before-seen footage, this is a continuation. Sam, of the My Financial Friend YouTube channel, gives me an interesting strategy when trading Solana.
If Bitcoin goes up to 100,000, right, way up here, you would think that Solana would do really well, right? Like Bitcoin dominance is relatively high right now compared to what we've seen in the last few years. You would think Solana maybe does, I don't know, instead of doubling, maybe 3x's, right? Bitcoin dominance goes down, Solana 3x's. Let's say you're using Solana as a collateral.
By the way, follow along on exchange partner Margex and use code Altcoin and claim up to $10,000 in bonuses. Link down below. And remind us why you like Margex. That's the platform we're using. Then we'll jump in.
Yeah, so there's no KYC, meaning you don't have to give out all your personal information. I think we all see data breaches almost every day, it seems like, with all your personal information. Maybe if you own 100 Bitcoin, 10 Bitcoin on an exchange, you don't want people to know who you are or your social security number or anything like that. So you don't need a KYC, you don't need a VPN. You can get set up in just a few minutes after checking the terms and conditions.
And obviously not your keys, not your coins. So if you're not trading it, don't keep it on exchanges. Common safety with crypto. This was the trading tip though, the edge.
One of the really cool things that they have is you can use different forms of collateral for trading, which is one of the strategies that we'll be talking about today, which I don't know any other exchange that does this.
So that basically means for individuals that want to trade the stability of the Bitcoin price, but want to offer up maybe an altcoin they made bank with as collateral instead of cash.
Let's say you want to trade Bitcoin because it's got the most liquidity. It's got some volatility compared to normal assets, but it's not moving around, quite as much as a smaller crypto or a meme coin or something like that. You're trading the Bitcoin chart here, and you can use all different forms of collateral from Bitcoin to Solana, USDT, Caspa, XRP, ETH. And that is actually the first strategy that we'll talk about. It's using different forms of collateral. A lot of people naturally use USDT for trading, or maybe they'll trade Bitcoin with Bitcoin, right?
So if that's unclear, here's an example of how that may provide traders with an edge.
Right? Let's say Bitcoin goes from 50,000 to 100,000. It doubles, right? And you're on 10x leverage. Great. You get a huge return, a 10x, right? You would have, instead of $100, you'd have $1,000 or 1,100 because you made $1,000. If Bitcoin goes up to 100,000, right? Way up here. We've never been there. People are excited. People are putting their life savings in Bitcoin. Like, people are coming out of the woodwork to try to buy more Bitcoin. You would think that Solana would do really well, right? Like, Bitcoin dominance is relatively high right now compared to what we've seen in the last few years. You would think Solana maybe does, I don't know, instead of doubling, maybe 3x's, right? Bitcoin dominance goes down, Solana 3x's. Let's say you're using Solana as a collateral.
And here is why using an altcoin like Solana as collateral may be a benefit.
And Bitcoin, you went up, to 100,000. You would have still that 10x on the Bitcoin trade. But let's say you had Solana instead of USDT, right? You put in $100, you have $1,100 in USDT, or you use a Solana or half a Solana, whatever it is. Let's call it one Solana. You would then have 11 Solana. You get a 10x return, or you'd get 1,000% more, right? But the Solana goes up in value from $150 up to $450. It triples. So again, your US dollar value of that trade has gone up exponentially. Your Solana was the collateral. So it's up that 11x, but again, it's worth a lot more. So it's a way to play Bitcoin dominance that you can't do in other ways that I've seen. Like, if you're thinking Bitcoin dominance is going to go down and you think Bitcoin's going to go up, you can make a lot more money. You can really outperform based on this ability, which I just haven't seen on other exchanges. They don't allow you to use different forms of collateral besides maybe USDT and maybe the underlying crypto as collateral.
And is there any risks to using something besides cash as collateral?
There's no extra risk in terms of liquidation, right? The trade is entirely based on when you get in and your leverage, right? The price that you get in at 50,000 in your leverage. So the liquidation point on a 10x leverage at 50,000 would still be 45,000, whether you use Bitcoin or Caspa or USDT, whatever it is. There is more risk if it went down and you closed it early, right? If you get liquidated, it doesn't matter. You lose the $100 worth of Bitcoin, the $100 worth of USDT, Caspa, whatever it is. If it goes down and you close it early, then you'd be down, let's say you're down 20% on the trade, and then Bitcoin's also down 20%. But if you opened it up with collateral, like Bitcoin as collateral, you still have the same amount of Bitcoin. It doesn't really matter the US dollar terms because you're happy that it's Bitcoin, right? But if it goes up, that is where you make a lot more money.
So just another tool, a little bit of edge to add to your arsenal. Obviously, investing in cryptocurrency in any capacity comes with risk. Do your own research, make your own decisions. But like always, see you tomorrow.